In October of 2022, I made a very unpopular prediction. So call me an optimist, but I think a single positive catalyst for the stock market, just like the water was for the mum outside, is going to be enough to propel this stock market higher and set a long-term bottom here. We have history on our side. Valuations are at historical lows, no matter what valuation metric you use. You have a midterm election year. You have the fact that inflation has been stifled. There is a lot of positivity amidst all of this negativity that people are just choosing to ignore right now. And typically, that's when you find a stock market bottom, when nobody is expecting it. But I am being honest with you about what I'm seeing, and I'm breaking this down for you. I think a long-term stock market bottom, if CPI data comes in flattish, is very likely. But yeah, I want to enter my career with the best buying opportunity of my lifetime. That's what the investor in me wants. I want to be able to buy significantly lower prices than we're even experiencing now. But unfortunately, I do not think that's going to happen. The bottom of the market came 8 days after I made this video, and ever since then, the NASDAQ has rallied by more than 63.5%. I was bold enough to make this claim despite people laughing at me and calling me an idiot. If you want to go look at the comments of that video, feel free. Click the eye in the top right-hand corner to go visit that video. And literally nobody else in all of finance media, I have yet to find a single person was calling the bottom in October of 2022 when I did. I say all of this to prove to you that I'm not here to make the popular opinion. I'm not here to make the popular statement. I'm here to give you my opinion on what I'm seeing currently, whether it's popular or not. Over the last 2 years, I have been extremely accurate in predicting what the stock market is going to do. I'm not naive. I know this isn't going to continue. I know eventually I'm going to be wrong because I don't have a crystal ball, and if I did, I would be a trillionaire by now, even though I'm only 22 years old. But today, my bold prediction that may or may not come true is that we are getting close to seeing another sell-off in the stock market. And I'll be discussing why I think that in today's video. If you are new here or returning and not yet subscribed, please subscribe down below. I love seeing all the new faces. My YouTube channel has been growing like crazy. We have the best community out there, and that's all thanks to you guys watching this video. But let's start with today. If you owned small caps, you actually had a really, really good day. And this is unheard of because for the past 3 to 4 years, small caps have gone nowhere. Today, the small cap index, the Russell 2000, was up 90 basis points, almost 1%. And this is despite the NASDAQ actually having a negative day. The NASDAQ itself was down 20 basis points today, which isn't much, but the reason it wasn't much is actually because all of the stocks outside of big tech and outside of the Magnificent Seven were the ones that rallied today. All of big tech today was red other than Apple and Tesla. Tesla has performed terribly because interest rates have gone up and the gross margin at their company has been squashed. But today, Tesla was up 2.23%, and they're a lot of the reason the NASDAQ didn't fall more than it did. Now, I want to make this clear early in the video. I don't think we're going to see a huge crash come. I think we're going to see lots of days that look like today, where the NASDAQ is down 20, 30, 40 basis points, while small caps and mid cap indexes are up 50 basis points, maybe even 100 basis points on some certain days. Monetary policy is changing yet again. A lot of the reason that the Magnificent Seven went up is because they have strong balance sheets and they're the least affected by rising interest rates. But as interest rates are due to come back down, it means that all of these other companies that have been struggling, that need access to cheap capital, their valuations are going to go up as interest rates come down. So we're going to see this market breadth expand, which is really, really good for a long-term rally to take place. Right now, we know for a fact that based on what the Federal Reserve has already told us, interest rates have peaked. That is a fact. They are going to come down. It's just a waiting game now on when they will actually be lowered and how many rate cuts we're going to get. And this is actually why I think the markets are going to sell off. If you look at the chart that's on the screen now, you will see the current federal funds rate, which sits at 5.33%, compared to the 12-month federal funds rate futures. This is implying that the market believes we're going to see 5 rate cuts in 2024, bringing the federal funds rate down to 4.18%. Personally, I think the market is ahead of itself here. I do not believe we're going to see 5 rate cuts take place in 2024, and that's for a multitude of reasons. One, the Fed has already implied that they're in no rush to lower the federal funds rate. Second of all, if the Fed lowers the federal funds rates while we're in a huge market rally, they risk inflating a speculative asset bubble. If we have an asset bubble, eventually that turns into renewed price inflation, which would restart this whole process over. And this is something that Jerome Powell is aware of, and he is keen to. He knows that the Fed cannot afford to inflate a speculative asset bubble. And an asset bubble is basically what we have right now with several stocks. Just look at KLA Corporation. This is another play on AI that the market really likes right now. Ever since 2019, look what this stock price has done. It's gone up in a straight line. Whenever you see this, you should realize that stock prices going up in a straight line, that's never sustainable. Just over the past 5 years alone, KLA Corporation is up 470%. To put this into perspective, generally with investing, you expect to double your money every 10 years. Investors in KLA Corporation have doubled their money every year for the past 5 years. We can also look at NVDA, which is an even more crazy story. Over the past 5 years, NVIDIA stock is up 1,742%. And just look at what NVIDIA stock has done since October of 2022 when I called the market bottom. It has gone up in a literal straight line. Again, this is not sustainable. Sure, NVIDIA and KLA Corporation, they can keep going up in share price, but the manner in which their stock prices have been appreciating is completely unsustainable. And honestly, the fact NVIDIA is up so much in such a short amount of time is the bulk of the reason the stock market has performed so well for the past 12 to 16 months. I do personally believe that AI is going to power the 2020s a lot like the 1920s. The economy, I believe, is going to benefit tremendously from the powers of AI. But right now, we're at a very crucial point. Does this turn into an asset bubble of irrational exuberance, or is this a very healthy bull market for the long term? And to answer that question, maybe it's not an answer, but in my opinion, in order to avoid this irrational exuberance and this huge inflated asset bubble, we need to see the stock market take a breather. And again, our Federal Reserve is not dumb. There's a reason they've pushed back against the market's anticipated 5 rate cuts this year. And this sort of Fed speak is going to continue, where Federal Reserve governors are going to speak on live television, pushing back against this notion of 5 rate cuts until the market reprices things and takes at least a couple of those rate cuts out of the equation. As this all happens, I believe that the interest rate sensitive companies, their stock prices are going to start to find a bottom and continue their recovery. A lot of interest rate sensitive companies have been priced for disaster. I mean, just look at Enphase Energy. And as a result of that pricing, because Enphase Energy came in with less bad guidance than the market anticipated, the stock is up over 10% after reporting their earnings after hours today. So in my opinion, I believe that the Magnificent Seven's major outperformance is coming to an end. We can look at Meta, who just recently reported perhaps the best earnings report in the history of the stock market, and their stock price obviously rallied as a result of that. But when we look at the Blue Angels Implied Price Index, this takes PE multiples and shows you where the stock price is trading at compared to that PE multiple. We can see that historically, Meta's top is generally around a 25 multiple on its forward earnings. And that's exactly where we are now. You can look back at the 2021 time period and even the 2020 time period and see that that was kind of the upper level. And you can also identify the tremendous buying opportunity that presented itself in Meta stock in late 2022 right here, where it was trading for way less than a 15 forward multiple on its earnings. But this isn't just Meta. A lot of the Magnificent Seven is trading at its upper range when it comes to average historical forward PE multiples. And this is my next point. Things right now have played out literally as good as anybody anticipated. My Goldilocks scenario that I laid out in October of 2022, I would say 0.1% of investors actually believed that that Goldilocks scenario would play out. Well, now you have 99.9% of investors believing that this Goldilocks scenario is playing itself out and has played itself out. My belief was that the economy and companies' earnings could perform very well even at elevated interest rates. You see, the way I look at interest rates right now is that they've normalized back to a 4 to 5% level. Lots of people will tell you that that's just so high, but it's not. We just got used to free money, 0% interest rates. I think we've just normalized by increasing our interest rates. But again, that's the Goldilocks scenario that nobody believed a year and a half ago. But now everybody believes that it's possible, and everybody believes that it's playing out, because how could you not? Numbers have been incredible, whether you look at company earnings or the Fed's anticipated GDP growth of our economy. The Atlanta Fed's GDP Now model recently revised its estimate for Q1 of 2024. Previously, this model projected that we would grow our GDP at 3%. That number has been elevated to 4.2%. That is really strong growth for Q1 of 2024. But this is what worries me. Nothing right now is going wrong. Everything is going right for the economy and the stock market. And you know what? It's not popular, but this is when something will go wrong, because historically this is when things have gone wrong, when everything looked tremendous and everything was just great, no issues in the economy. That's when disaster strikes. And lastly, if you guys didn't know this, as a part of the Consumer Confidence Survey, there's actually a section in there where respondents are asked if they think stock prices will be lower in the next 12 months. And during the month of January, this percentage of people cratered. Right now, only 24.9% of respondents expect stock prices to be lower in the next 12 months. You can also look at bull to bear ratios, where according to Investors Intelligence, there are 3.5 bulls right now to every bear, and according to AAII, there's 2 bulls for every bear. But no matter which one of these charts you look at, it's evident right now there are an extraordinary amount of bulls in the market. This is in direct contrast to when I made my bottom call in October of 2022, where there were very, very few bulls. In fact, the amount of bears actually outweighed the amount of bulls, which is very rare, because what's the stock market done for all of history? It's gone up in a straight line. But I want to reiterate, I don't think we're going to see a huge crash. I just think we're due for some sort of correction where the Magnificent Seven underperforms, and as a result, the NASDAQ also underperforms. I believe 2024 is going to be a tremendous year for interest rate sensitive stocks, as well as small cap and mid cap companies. And I have my cash ready. If you want to keep up with my buy and sell alerts, you can join my membership by hitting the join button down below, located right next to the subscribe button, or you can hit my Patreon link in the pinned comment. But with that, I'm always open to hearing everybody's opinion, because it helps me come up with a better opinion for myself. So if you want to share your opinion about the stock market right now, please do so down in the comment section, and remember to subscribe if you guys are new here or returning and not yet subscribed. With that, I hope you have a great rest of your day. Stay blessed, keep 10 toes to the ground and your chin up. Peace out.